Hey everyone, welcome back to Corporate Decoder. Today we're diving into Rhythm Pharmaceuticals' latest proxy statement. Think of it as the company's yearbook, except instead of awkward photos, we get a peek at who's running the show and how much they're getting paid, along with some other juicy details you won't want to miss. This proxy statement is basically Rhythm's way of asking its investors to vote on important stuff, like who gets to be on the board of directors and whether they approve of how the top executives are being compensated. It's like a popularity contest, but with real-world consequences. First up, we've got the election of directors. Jennifer Good and Edward Mathers are up for re-election to the board. Directors are kind of like the supervisors, ensuring the company's being well managed. The board thinks you should vote for both of them. Next, there's the minor formality of ratifying Ernst & Young as the company's accounting firm. Think of them as the financial watchdogs, making sure the numbers are accurate. Again, the board says yes. Then comes the say on pay vote. This is where shareholders get to voice their opinion on how Rhythm's top executives are being paid. It's non-binding, meaning the board doesn't have to listen, but it's a good way to send a message. The board still wants you to vote for it. Now things get a bit more interesting. There's a proposal to amend the company's charter to protect officers from certain lawsuits. This officer exculpation amendment is a hot topic in corporate governance. It would shield officers from monetary liability for certain breaches of their duty of care. There are, of course, limits. They wouldn't be shielded for acting in bad faith. The board of directors is unanimous that you should vote for. Just in case there aren't enough votes to approve the officer exculpation amendment, there's also a proposal to allow the meeting to be adjourned so they can keep soliciting votes. This just gives them more time to convince shareholders. So who gets to participate in this corporate election? If you owned Rhythm Pharmaceuticals stock on April 28, you're eligible to vote. Each share of common stock gets one vote. Also, some preferred stockholders get a say as well. Let's recap the board's recommendations. They want you to vote for the election of directors, for the accounting firm ratification, for the executive pay, for the officer protection amendment, and for the meeting adjournment proposal. The proxy statement also gives us some background on how the board operates. They held 4 meetings and all board members attended at least 75% of the meetings. Good attendance is important, it shows commitment. The board has determined that most of the directors are independent. This means they don't have relationships with the company that could cloud their judgment. The audit committee keeps an eye on the company's accounting and financial reporting. This is a critical role, helping to ensure transparency and prevent fraud. The Compensation and Management Development Committee decides how much the executives get paid, a key part of this discussion. The Governance and Nominating Committee deals with, governance. It oversees things like director nominations and corporate responsibility. Want to nominate someone for the board? The Governance and Nominating Committee lays out the process. Stockholders can recommend candidates, but they have to follow specific rules. There are minimum qualifications for board members. They need integrity, good judgment, and a track record of success. It's not just about being rich or famous. The company actively engages with stockholders. They met with over 175 institutional stockholders in 2024. This kind of engagement is a positive sign. It means they're listening to investors. Now let's talk about how much the directors themselves get paid. Non-employee directors get an annual retainer fee plus extra for serving on committees. They also get stock options. For example, Edward Mathers in cash got $95,000 from annual cash retainers, $165,565,569,142 in option awards, all said, totaling $659,142. The report tells us about the executive team, including David Meeker, the CEO. It outlines their backgrounds and experience. These bios show that the leadership team generally has relevant experience. The compensation discussion and analysis explains the company's philosophy when it comes to executive pay. They want to attract talented people, motivate them to perform, and align their interests with shareholders. The goals are pretty standard: attract and retain talent, incentivize performance, and align interests with stockholders. But how does it work in practice? First, there's base salary. That's the fixed amount executives get paid, kind of like a regular paycheck. Then there's incentive pay in cash. This is where performance comes in, which for David Meeker totaled $744,135. Finally, there's equity compensation in the form of stock options and stock awards. This ties executives' wealth to the company's long-term success, but also introduces risk. The company has a strict insider trading policy prohibiting hedging and pledging of company stock. These are safeguards against executives misusing information or taking excessive risks. Executives also get retirement and health benefits, same as other employees. There are also severance and change in control arrangements, meaning executives get a payout if they're terminated or if the company is sold. These arrangements are designed to protect executives during uncertain times. Rhythm has a clawback policy, which means they can claw back compensation if it was based on inaccurate financial information. They also implemented a stock ownership policy. For example, CEO is required to have stock holdings worth at least 3 times his base salary. Here's where we see the actual numbers. David Meeker, the CEO, made over $14.6 million in 2024. This includes salary, stock awards, option awards, and incentive pay. Hunter Smith, the CFO, made about $5 million. For the C-suite executive, it's clear that the vast majority of their income is derived by stock awards and options, which are, of course, variable and very dependent on company doing well. The executives also get performance stock units, or PSUs. These are equity awards that vest only if the company hits certain performance targets. These are new this year based on shareholder feedback. This table gives a snapshot of the equity awards held by each executive at the end of the year. It shows how much unvested stock they have waiting to be earned. This shows options exercised and stock awards vested during 2024. Executives exercising options for profit and earning income when previously stocks vest is a sign they believe in the company as a whole. The report gives a sustainability overview covering Rhythm's social impact and human capital efforts. It emphasizes the company's focus on fighting obesity and fostering an inclusive culture. Finally, the report mentions that Rhythm spent $2.5 million fees to Ernst & Young in 2024. That's what it cost to keep the financial watchdogs happy. The audit committee basically signed off on the numbers, recommending that the financial statements be included in the annual report. So, what's the story here? Rhythm Pharmaceuticals is growing, expanding commercial availability, and moving forward with clinical trials. The executive team is well compensated, with a significant portion of their pay tied to performance. However, keep in mind that, like many other pharmaceutical companies, they are not yet profitable. The risks, like most pharmaceutical companies, Rhythm faces risks from regulatory hurdles, competition, and the possibility that their drugs won't be successful. A lot of that is now reflected in executive compensation planning, with PSUs tied to tangible company goals. Overall, Rhythm Pharmaceuticals seems to be on a solid trajectory, but it's not without risks. The company is making progress and executive pay seems reasonably aligned with performance. But these are always things you should be watching on the filings. What's good today might not be good tomorrow. As always, do your own research before making any investment decisions. Alt X for watching. Don't forget to like, comment, and subscribe for more corporate deep dives.